Good evening, good afternoon, good morning, wherever you're listening or watching us from. You're welcome to Stalker Team, the Investors Channel. Today, the 14th of March 2025. Before we go ahead, I'm going to quickly make a disclaimer. Every information shared on this channel is for information and, of course, education purpose only. So do not take any decision without doing your own due diligence and also perhaps speaking to your financial advisor. And of course, we want to welcome everyone to our channel. Welcome to this episode. We thank you for subscribing. We thank you for putting on a notification bell and also joining us on our Stalker Team community on X at Stalker Team Live. So if you haven't followed us on the X channel, please follow us, because that's where we share all the breaking news that moves the market and as well your investment portfolio, so that you can keep tracks of what exactly is going on and why this is important to your investment. So today I have a special topic, and it's a topic I have actually taken some time to discuss or wait before actually discussing it, so that I don't, as much as possible, not necessarily send the wrong signal, but I actually need to make sure everyone on this channel understand what this channel is about, and the fact that this channel is about investor education, financial information, basically building capacity for retail investors, whichever what you have, how you want to invest, where you want to invest, what you want to invest in. So far as you invest in the global financial markets, either the equities, the bonds, the fixed income, on Wall Street, outside of Wall Street, in emerging markets, this channel is for you. Now, on that background, I have this special topic, which is Bitcoin ETFs. So I have gotten a whole lot of feedbacks, a whole lot of suggestions of what to speak on, as to do I recommend anyone investing in Bitcoin? Do I personally invest in Bitcoin? And how do I want to actually guide anyone if they want to invest in Bitcoin? Now, this topic comes also with its own special disclaimer. This is not necessarily an endorsement of Bitcoin as an investment item or security. This is not a recommendation that anyone should buy Bitcoin. It's basically bringing you some other ways you can have exposure to Bitcoin as an investor. So Bitcoin itself has a whole lot of positives, a whole lot of quote and unquote shenanigans, and a whole lot of intricacies that has been misunderstood, that has been misinformed or disinformed to the general public. So if you are a retail investor who actually wants to protect your capital, you want to actually secure your capital and also have some exposure to this kind of asset, I'm not going to actually take this episode to more or less do a whole lot of education on Bitcoin itself. It's not necessarily about Bitcoin. It's just an episode that actually says if you still want to invest in the financial market, but you want to actually have some, perhaps not necessarily shielded, but very limited exposure to Bitcoin, or a more regulated exposure to Bitcoin, because of course we know Bitcoin is not regulated, it's not controlled by any government or central authority. It's just an open platform, an open blockchain that anyone can actually have access to, irrespective of how small or how large they can trade on the blockchain. So this is not necessarily to talk about Bitcoin itself. It's just saying if you are an investor, you've invested in stocks on Wall Street, outside of Wall Street, but you've actually seen the gains that people are making on Bitcoin, the hype, the ups and downs, but you still want to have some exposure to it. How do you actually go about that without necessarily directly holding Bitcoin, without having all the risks that comes with trying to hold your Bitcoin, secure it yourself, store it securely, send it or trade it. Bitcoin ETFs actually gives you that kind of opportunity to still have, not necessarily shielded, but a more regulated access to having Bitcoin exposure. So Bitcoin itself, just looking at why you might actually want to consider Bitcoin ETFs. Bitcoin itself could be a bit difficult to manage and hold because the technology has its own intricacies, its nuances, and because of the fact that a whole lot of people don't actually have that, they actually have the limited knowledge. Many people have been bamboozled into giving their funds or their capital to crypto scammers, crypto fraudsters who actually deceive them that they've actually invested in Bitcoin. So Bitcoin is a bit difficult for a whole lot of people, the average person, to understand and hold and not actually secure. It's also volatile, like we said, and to an extent, it doesn't necessarily have that intrinsic value compared to when you hold a stock or you have shares in a company that you become a shareholder to the profit and liability of the company. But Bitcoin doesn't necessarily have that kind of peculiarities. It doesn't have that kind of uniqueness. It is what it is, depending on what the network actually decide. You can't also trade it just like the way you trade stocks. You actually have to trade it in the crypto market, in a crypto exchange, which is totally different from the way you trade stocks. Yeah, it's a bit similar, but it's totally different, and the nuances are also different. So, however, why should you actually consider Bitcoin ETFs? Like I said, it shields you from the risks. It shields you from the fact that you actually have to be very savvy on how to store, securely manage, and transmit or even sell your Bitcoin whenever you want to trade it. So Bitcoin ETFs gives you the opportunity to have a less a whole lot of things to a whole less of things or challenges or technology to actually worry about. It's also very tradable. You can trade it, buy it like you buy your typical stock on any of your major brokerage accounts, especially brokerage account that allows you to actually buy these ETFs. Most of these ETFs have now been approved in the US. So if you are from the US and perhaps maybe Australia and some other countries, and to an extent, indirectly, if you're in the UK, you might actually have access to some of these ETFs for you to actually buy them just like you buy any other stock. They are also a bit more transparent because these ETFs actually tracks the performance of Bitcoin itself. You actually know what exactly you are buying, when you are buying, and these ETFs actually hold Bitcoin to an extent. Some of them have limited exposure to Bitcoin, and so at the end of the day, as an investor, if you still want to have a little bit of risk, you don't necessarily want to be too conventional the way you invest. You actually want to maybe tune up the volatility on your portfolio. Bitcoin ETFs might actually be something to consider. Now, I have the top 3 Bitcoin ETFs that we are going to look at today. So these 3 Bitcoin ETFs, I selected them because they are not just the most in-depth, they are the most recognized. They have strong brand names. They have very, very robust exposure, and they are very liquid. So you can trade it, you can buy and sell these ETFs without having to worry whether there's going to be liquidity problems or and they are properly managed by established investment giants, such as BlackRock, such as Fidelity. These companies have trillions of assets under management, so they are able to actually provide that market making structure that allows you to buy and sell these ETFs. These are not Bitcoin per se, but they actually track the performance of Bitcoin itself, and some of them actually have direct exposure to buying and selling Bitcoin, which determines the price of these ETFs. So just come with me. Let's look at these three ETFs, and we actually look at the performance over time. So the first on the list of the Bitcoin ETFs I'll be looking at is IBIT, which is actually iShares Bitcoin Trust, ticker symbol IBIT. So whichever brokerage account you use, whether you're in Canada, in the US, in Australia, in New Zealand, in the UK, or maybe also in sub-Saharan Africa like Nigeria, South Africa, Egypt, Morocco, you can actually search for IBIT. If you can see it in your brokerage account, that means it's approved in the market where you are, and also the broker you use actually have access to it. So IBIT is owned or issued by BlackRock. BlackRock, of course, is the largest investment company in the world with trillions of dollars in asset under management. However, IBIT itself has about $46.5 billion of the value of this ETF, the asset under management under this ETF. It is highly liquid. The issuer, which is BlackRock, the largest investment company in the world, is very reputable. It has some limited direct ownership of Bitcoin, so they don't necessarily hold Bitcoin for to actually determine the price of this ETF, but it actually tracks directly the price of Bitcoin, how it trades. It could be a bit volatile due to the fact that it's actually tracking Bitcoin. So if you look at this chart now, you can see that because today the market was actually on a very bullish move, it's up by over 5%. But if we look at the last 6 months, this ETF, IBIT, has done well over 46%. All-time high, this ETF has done over 72%, and that's just less than how many years? Less than 2 years when this Bitcoin ETF has been approved and listed in the market, in the financial market. So the next one I'll be looking at is Fidelity Wise Origin Bitcoin Fund, which is FBTC. The ticker symbol is FBTC. So put that in your brokerage account, whichever country you are, whether you're in the UK, US, Australia, New Zealand, Canada, or in sub-Saharan Africa like Nigeria, Egypt, South Africa, and Morocco. You can actually search for this. So if you are able to see that, that means it's approved and available for trading and investment in your market. Today, up also around 5%, just tracking what Bitcoin is doing. All-time high is done over 76%, and you could actually see that this ETF is not doing badly compared to its peers. 76%, very, very similar to what IBIT is doing. Now, the last but not the least, but to an extent, is the best performing ETF that actually tracks Bitcoin. It is the Grayscale Bitcoin Trust, so which is GBTC, ticker symbol GBTC, and of course whichever country you are, whether in the UK, Canada, Australia, New Zealand, in sub-Saharan Africa like Nigeria, South Africa, and Morocco or Egypt, you can actually search on your brokerage account GBTC, ticker symbol GBTC. So if you look at all-time high over around 1,500, well over, it's done very well, because even in the last 5 years, it's done well over 867%. Because so what happened is GBTC was listed earlier than any of the Bitcoin ETFs because they didn't have direct exposure to Bitcoin. It was just Bitcoin futures. And when the SEC in the US approved Bitcoin ETFs to be traded, they actually put the application in and they were approved. So, it's also very recognized. Grayscale is recognized. The company is a Bitcoin investment trust. The fee is a bit higher, so the kind of return you get is also impacted. But this has done exceptionally well. So, in conclusion, we've seen Bitcoin ETFs as one of the ways to have exposure to Bitcoin, and not necessarily buying Bitcoin if you can't secure it, if you don't have knowledge of the technology, how it works, how you can actually transmit or trade it. The Bitcoin ETFs gives you that opportunity. However, and which is also the disclaimer I'm going to end on, it is still volatile. It is still, directly influenced by the price of Bitcoin. If you look at the last 1 month, you can actually see that GBTC went down by about 10%. If you check the price of Bitcoin itself, Bitcoin has actually gone down by roughly 15 to 10% as well. So as people start selling their Bitcoin, if there's any volatility, any international or national news headlines like the tariff or the Trump tariff trade war with Canada, Mexico, and China, all of these things actually affect Bitcoin itself, because Bitcoin is a risk on asset that people actually use to speculate. And if investors rather actually think that inflation is going to be a problem, or there's going to be liquidity problem, a whole lot of people will actually borrow money to trade Bitcoin futures, Bitcoin ETFs, and a whole lot of other derivatives that is linked to Bitcoin. They tend to actually sell aggressively when you have negative news. But if the market is a bit more upbeat, more risk on, you actually see people buying more Bitcoin. So you can actually try and average your way in, and perhaps you can actually have a short to medium strategy. Maybe you don't want to hold this for too long. When Bitcoin is actually on a downward trend, that's the best time to buy your way into this ETF. And if Bitcoin is actually moving back to the all-time high, you can actually see if you want to take profit or actually sell your position to actually protect your capital and also your gains. So thank you so much. If you have watched this far, please subscribe to our channel, put on your notification bell so that you don't miss any update. We thank everyone who has been part of this channel, following us which is till Monday, when the market opens. Thank you so much for joining. Keep investing and keep growing. Take care and bye bye.